Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Actually, apologies, it's earnings seasons and it looks like we're getting the Yes Bank numbers. That's right, so I'll just open it up for you. In our own poll had actually, okay, 1206, that's the profit number that has come in.
That
for...
is a little, I mean, pretty much in line with what our poll threw up. It was close to 1194 crores odd, and the profits have come in at 1200 crores.
I have the gross NPA numbers as well, 1.31%, that's the GNPA number, so that's an increase. And 0.59 on the net NPA, so that looks like it has gone down a tad. So in terms of gross NPA, 1.31%. In terms of the absolute number that we have, it's 2824 for gross NPA and 1262 crores, that's for the net NPA. So on the gross NPA level, it has gone up in absolute terms as well as a percentage of the book, and net NPA terms at 1262. That has it's a bit of a shave off actually, so that's looking better. 0.59% is the number on the net NPA level.
All right, the company has uploaded their presentation on the exchange as well. It says the gross slippage has been of rupees 560 crores, of which they expect 314.8 crores to be fully recovered before September 30th, 2018. So that is something we will watch out for. Gross NPA absolute terms is 2824 crores. We also have Abhishek with us. All right, it's 1260, beg your pardon, not 1206. So that's a tad bit above our estimates, about 60 odd crores higher than our estimates. But gross slippage of 560 crores from the presentation is something that I have gathered. We also have Abhishek with us. Abhishek, first look at these numbers. What would you say?
The slippages are on the higher side, Mangalam, to be very fair. The slippages, I mean, we did mention in our preview links that analysts on street like BNK Securities are working with a slippage of 500 crores, and it has come in at 560 crores. That compares to about 380 crores in the previous quarter. So the slippages in percentage wise has increased by 47.3% on a quarter-on-quarter basis. Despite that, the asset quality remains stable at 1.31 gross NPA. That compares to about 1.28% in the previous quarter, and that is on account of two key reasons. One is that the base growth or the loan growth has been pretty robust, and the other factor being that they have also seen recoveries in key accounts, which meant that gross NPA in absolute value has not increased in line with slippages. Back to you.
Provisions have come in at 625.7 crores, so that looks highly elevated because on a Q-on-Q basis, they compare with a number which is just under 400 crores, and a Y-on-Y basis, that number is actually about 280 odd crores. So the way they have described their provisions is that about 380 odd crores is NPA provisioning, which includes 150 odd crores towards increase in provision coverage. 93 odd crores is towards the MTM losses that they have seen on bonds. So MTM losses of 278 crores will be amortized during FY19 under the RBI dispensation. So as of now, the provision number is at 625.7 crores. I think we have our first reactions as well. Krishnan, ASV of SBI Cap Securities, joins in. Krishnan, good afternoon. You've had a first look at the numbers. What do you think?
Yeah, so we were working on working with slippage numbers of roughly about 450 to 500 crores. To that extent, 560 crores is a little above what we were expecting. And so to that extent, there's probably a 4% miss to our numbers in terms of where we are on our earnings estimate. But yeah, I mean, we'd rather wait and listen to what the management has to say in terms of where this disappointment in slippages is emerging from before we can take a better view.
I'll just explain the NII growth, that is a tad bit lower than our poll. So the NII growth is at 22.7%. The total NII has come in at 2,290 crores. That compares to about 1,809 crores. So we were working with a growth of 24%, which was 8 quarterly low NII growth. So obviously this 22.7% is the lowest NII growth in last 8 quarters for Yes Bank. And remember, remember that the stock has already rallied 20%. So given that fact, PNL as across other private banks, what we have seen is that the balance sheet growth has been robust, but the NII growth has been on the lower side in terms of balance sheet growth. So that is going on with Yes Bank too.
Okay, we have Lalitab Srivastav and Ashutosh Mishra as well joining in. Gentlemen, good afternoon. Lalitab, first to you. Okay, Ashutosh, let me come to you. What are your thoughts? What's your first take?
So, NIM and NIMs both are below our estimate, and even slippages is slightly higher, so we need to look into that. Whether NII is because of the higher slippages or some other reason is there.
All right. Abhishek, what would you make of the advance growth of 53.4% so far that the company has done? You did say that the balance sheet has expanded as well, but the NII hasn't grown as much. What exactly does that imply?
See, for last 6 quarters, barring this quarter, I have not calculated the yields, but the yields on advances as per my calculation for Yes Bank has declined from 10.9 to about 8.79% levels. So that continues even in this quarter. If you look at the advances growth is close to 53.5%, but your interest income is up 1.4%. So there is a decline in yield, and if you can see the interest expenses in line with other private sector banks, the cost of funds has been rising over the last 6 to 9 months. The yields, the interest rates in the market has actually risen, and that has caused a spike in all the cost of deposit for entire private sector banks, and Yes Bank is no different from the same.
We have some details on the yields. They're saying in the first quarter of FY19 the yields are 10%. That compares with quarter on quarter, which was 9.9%, 4%. As far as the NIMs are concerned, they've come down to 3.3%. This compares with 3.4% a quarter ago and 3.7% in the relevant quarter of the previous year. So 3.7%, a 40 bips decline in the net interest margin year on year, and a 10 basis points decline quarter on quarter for Yes Bank's net interest margins. Yield on advances at 10%.
The net interest margins are the lowest in last 11 to 12 quarters.
Okay.
The last time they recorded 3.3% was way back in Q2 FY16. So you look at the net interest margin, it has come down, and it's at 12 quarter low of 3.3%.
Okay, Krishnan, what's your rating on Yes Bank, and how would these numbers factor into that, or would you still wait for the management commentary?
We have a buy recommendation, and as Abhishek just mentioned, we have seen a fairly steep rally over the past 3 weeks in the stock. But yeah, there is some steam left in terms of our target price for sure. But as I said, this is about a 4% miss to our numbers. I don't read too much into just one quarter unless we think there is some material, deviation from what we are assuming in our thesis.
Krishnan, one question to you on private sector banks. This quarter, especially the large banks or, the ones with higher market share, we have seen their market share increasing, but it's coming at a cost, and that is the yields. So how do you read into this balance sheet growth of private sector banks, given the fact that, their valuations are also on the steeper side?
Right. So purely on loan growth, the 53% is like a scorching pace. Very clearly, we were not expecting such an elevated growth. There is an element of refinancing that's very clearly happening. There is an element of NCLT-led transactions where the likes of Yes Bank are able to play a better role now, and very clearly there is 40% loan market share. Banks with nearly 40% loan market share, which are currently starved of growth capital. So to that extent, they can't grow. And so hence the rest of the growth has to accrue to these lenders. But yeah, 53% is a bit on the higher side. Having said that, obviously because your loan growth is so high and your deposit mobilization needs to you need to mobilize funds in order to fund that growth. Very clearly, NIMs are under pressure for the healthier lenders, because most of the other lenders who had asset quality problems already had absorbed a fair amount of NIM burden. So,
all right, hang in there, Krishnan and Abhishek as well. Just can't take your eye off the market right now. The Nifty has slipped about 25-30 points from the high point of the day, virtually holding on to the green with just about 14-15 points right now. The stock which is leading the Nifty lower, of course, after Yes Bank, we have the likes of Infosys. That one should come up for you. That one has fallen about 1.5% from the high point of the day, currently sitting towards the lower end of today's trading session. All the IT stocks, and ITC too reports its numbers that index heavyweight has moved lower as we speak. So Yes Bank numbers not doing well for the markets.
Yeah. Just
as
some
a whole,
more details also from Yes Bank regards the NCLT list 1. They say that now they have residual exposure to only one account, which is about 23.5 odd crores. NCLT 2 list, they have an exposure of about 655 crores approximately, which is spread across 7 accounts. And the entire funded exposure from this amounts to 568 crores across 3 accounts, which is classified as NPA. Adequate provisioning, of course, they say they have given this 50-60% chance of collectability. But as of now, the number for NCLT2 is about 655 odd crores. Abhishek, last thoughts?
The numbers don't look too exciting, and it is in line with what other private banks are reporting. The fact that slippages have increased, no, this is a case of worry, and we need to see what led to the rise in slippages. That is a key worry factor, because slippage rises more than 45% on a sequential basis, and we have not seen this kind of a slippage without any explanation. So we need to wait for management explanation on the same. The other worry factor is that the NIM, the net interest margin, is at 12-quarter low. Given the fact that NII growth is also at 10 to 11-quarter low, the P&L growth is not matching the scorching balance sheet growth that you are seeing. Now, remember that last year was not a small base for Yes Bank. Even in last year, in Q1, they grew their loan book by 32-33%. And this 2 quarters consecutively, they have grown more than 53%. So, scorching pace of balance sheet growth, but P&L growth is not matching. That is a cause of worry, because the stock has also rallied. So, we need to look into finer details as to what led to slippages and how do they see cost of funds moving ahead. They are a good participant in the bond market. So a rising interest rate scenario, how that matches to them, will need to be seen closely.
All right, Abhishek, Krishna and Ashutosh, thanks very much, gentlemen, for your quick take on Yes Bank. So as of now, it's the biggest mover to the downside on the index and perhaps souring the sentiment in the market as well. So about 4% now gone on Yes Bank. A quick break.